Good morning, everyone. Welcome back to the Schwab YouTube coaching channel for today's next topic, Trader Talk in today's market. And I am your host, Kevin Horner. It's a beautiful morning here in Denver, Colorado. As always, on a good Monday, I have a special guest. Today's is Schwab Regional Investment Strategist, Rachel Deshelle. Good morning, Rachel. Good to see you again. How are you?
Good morning. It's great to see you as well. I am doing great, and it is a rainy morning here today in Greenville, South Carolina. So you got some better weather than me over there, Kevin.
I tell you, this weekend felt springy, finally. We are heading down the home stretch of the school year for my kids. My senior had her last day last week, so we are right into the home stretch, graduation next week, and a lot of work being done around the house here. I'm sure I'm not alone in that regard. I bet everybody had I'm hopeful everybody had a really nice weekend. We have what appears to be one heck of a kickoff to the week, though, Rachel. A little bit of green to get us started, and I know everybody is excited to look at a bunch of charts, so let's take a quick second, run through all our details, and then we'll get right to it. So first, say hi to Mike Fairborn there in the chat, everybody. He'll monitor things for us. We'll get into your comments and questions as well. Rachel and I will keep an eye on things there too. So please feel free to post for the duration of the segment. We go about 45 minutes in total. Follow Mike and me on X, Mike Fairborn CS and Kevin Horner CS. Excellent way to ask questions and get with us outside of the classes we host. We would love to have your follow there, everyone. Additionally, if you haven't already, make sure you're subscribed to the Schwab YouTube coaching channel here as well. Now, some brief disclosures. Remember, our conversation is exclusively informational and educational. We do not make recommendations nor endorsements of a strategy or approach to trading the market. We talk technical analysis here quite a bit. In doing so, we discuss concepts and strategies traders may choose to employ. But in terms of decision making, we encourage you to think of technical analysis simply as a piece to the overall puzzle, not to be the entirety of your decision making, of course. And as far as an agenda is concerned, everybody, we go through top-down methodology here. We'll start with the broad indices. We will then move into some notable groups in the market. Today's conversation is going to be a bit about the risk-on nature of the move initially today. We'll see how that leads us, but that's going to mean we're going to be looking at some other areas of the market that we might ultimately not do on a very frequent basis, but after doing so, we'll move into some stocks in the news as well. So as always, plenty to review this morning. Let's talk, Rachel, about the start we have with the SPX. That, my friend, is a very big gap to the upside. Tell me about what you're paying attention to here.
That is an understatement there, Kevin. So we had massive gap this morning above that 200-day simple moving average and above that prior resistance right around that $5,800 level that really goes back all the way even to election day, where we saw that gap that occurred beginning of November. We saw price kind of retrace, filled that gap a little bit, and then has paused a couple times in the trend since then. And this morning with the price action, we have obviously gapped above that level. So it's going to be interesting to see if this trend maintains and kind of holds above that prior resistance, now new support.
Yeah, that's what we're hoping for, obviously, is to be able to call it exactly that, right? Some traders are going to be aggressive on a move like today's because of the enthusiasm behind it. Not everybody's going to be comfortable with that. Some of you are going to want to wait for a closing value today there. You might dabble a little based on the gap higher. Some might start to deploy some money at this point today just to see how it goes. But let's quickly take a peek at that intra-period and see what gap. Oh my goodness, Rachel, I didn't even realize it. That is an R3 gap move. That is an uncommon gap. My goodness, there's going to need to be some steps to maintain profitable opportunities. If you were long heading into this, I'm guessing traders are going to be looking to raise some exit strategies in terms of the levels we have now achieved, right? We have to take our disciplined approach no matter what's happening, right?
Of course, there may be some profit taking today, as we've seen with that major move above, and we can kind of see that candle this morning kind of retracing a little bit from the high, but again, wanting to maintain a disciplined approach, even though it's an enthusiastic move up, we want to make sure we still take our emotions out of the regimented process that we have for decision making.
I think that's a good way of putting it. Yeah, we can be excitable. We can be happy that we've got the move, but we can't necessarily do so with a reckless abandon, right? We must be disciplined in our process. So let's talk briefly about what's going on here. Why are we popping so aggressively to the upside? Well, futures spiked this morning ahead of the open when appears as though China and the U.S. have agreed to cut tariffs in a de-escalation of the trade war that has been going on in roiling markets for the better part of the last few months here. The countries will lower tariffs on each other for the next 90 days, according to a joint statement that was released in Geneva today. Now, under this temporary pause that was unveiled, the combined U.S. levies will be reduced to 30%, while the 125% Chinese duties on American goods are going to drop to 10%. So U.S. mega-cap stocks, of course, have benefited from this, and that's one of the reasons we're looking at such a fantastic start to the day here this morning, Rachel. So there's your look at the SPX. We don't want to dawdle on this because there are many key components that are changing as a result. Let's move into the NDX, the NASDAQ 100. Rachel, we have popped through a very important level. You can see I had my Fibonacci retracement built from last week. We cleared the 61.8% retracement with gusto this morning. Also, that 200-day moving average looks now it's going to look a little bit similar to what we're seeing in the SPX, isn't it?
Yeah, it looks like a similar chart pattern. We're even seeing that resistance hit from those previous lows in mid-January or so. So we're kind of seeing that level being taken out. The 200-day moving average, which had been flat, showing that we hadn't been in that long-term trend, really gapping above that today. So that's probably going to be that next area of support underneath that zone that we're kind of testing in right now as that previous resistance too. But we may even see with this move, looking at the shorter term moving averages, we're seeing almost a cross possibly taking place in the 20-day and in the 50-day. So that could be a short-term golden cross that some traders will be looking for with this shorter-term move off of those lows that we saw in the previous month too.
Yeah, I have to agree with that also. Boy, let's just, at the risk of getting a little too exuberant, I just want to point something out. This does have the makeup a little bit, doesn't it, Rach, of a little bit of an inverted head and shoulder move. And now today with the gap, some would suggest have a bit of a neckline that's more slanted in nature. I'm going to eliminate this line that we've drawn in for horizontal support. And some might say that neckline was kind of like this, a little wonky. Doesn't matter how it's really drawn, but ultimately the reason I'm looking at it is the size of the drawdown. If this is a legit short-term breakout, could we just apply this line to the upside and measure that move?
We definitely could. We want to take that width of the pattern or that height of the pattern where we see that head to the neckline and we can project that above the neckline. So I'm wondering where that puts us at as far as a trader's target price if they are trading that trend, trading that breakout, and it ends up being a sustained breakout. It puts us above those all-time highs there in the NDX. So that would be quite the move.
Now, let's restate the obvious as we often do. This is a measured move calculation, nothing more. Measured move simply utilizes prior price action as a means of trying to anticipate subsequent price action, in this case on a breakout. By no means are measured moves a guarantee to be achieved. They are much like an analyst target, never a guarantee to be achieved. But if you're thinking about it from the standpoint of the way that price action can move, you can see that the level we've taken out could mean that there's an upward bias into the former highs. Now you can see that if we take out the former highs, my goodness, we can get an even continued move from there. So, as our friend Lee Bull used to say, new highs are not bearish. And now we're not seeing new highs just yet. Be on the lookout for a potential continuation of the optimism. And again, for given the less uncertainty or the more certainty now, at least in the intermediate term, as it relates to the trade war and specifically to China's the discussion around China and the need for tariffs there specifically. Yeah, this really relieves some of that initial concern and pressure. So a pretty significant development in the S&P 500 as well as the Nasdaq 100 here, up about 3%. Now today we're getting an even bigger move in the small caps, up 4%. We generally don't get these types of significant moves in major groups, but given the nature of this, the potential benefit, how this lifting or at least the pause in the tariffs, Rachel, could have a big positive boost on the potential for the health of the economy, the numbers we're going to be seeing going forward being adjusted if all of this comes out favorably. Certainly small caps, which have been absolutely beaten down, are apt to get a little bit of a boost here.
Yeah, of course. And we're seeing we're seeing that rotation today into more of the growth areas of the market. And even with this one, I mean, similar pattern that we're seeing in a lot of the indexes too. But even, Kevin, if we kind of do one of our favorite things and zooming out a little bit just to kind of show the last few years, maybe even back to, the start of 2022, we can see the size of the range that the Russell has really traded in over that period. And so now it puts us again over that larger range with that move today too. Just that range that we've been kind of struggling under for quite some time with that latest pullback. So massive move today. And we'll kind of have to see if this continues over the next few days and weeks to come.
We sure will. This is a positive development. We're going to take it as such in the intermediate, the short-term period. But, we have to, this is one of the reasons, we talk about this stuff every day. We set these levels every day in this particular class because it helps to be prepared when we clear these levels. And then, because you could be sitting on your hands this whole time, and then a move like today can lead investors and traders both to start utilizing those former resistance levels as new support levels. It can be really opportunistic. We're getting some big moves today. My goodness, we're going to have to look at a couple other spaces we don't normally. First, the semis, which we often look at. I'm bringing this one up because this still looks different, Rachel. Now, we have rallied. It's a great open, 5.5% up. We are at resistance, though. Bit of a different viewpoint here in the semis compared to the Nasdaq, compared to the S&P, even compared to the Russell.
Yeah, the semis look a little bit different. This is one of those groups that is, while it did have a gap up on the day, it still isn't above its prior resistance. So just like the other indexes really are that we've looked at so far, it's still, with the gap up, trading a little bit below that and below its 200-day simple moving average, which is still kind of sloped down a little bit. So there is still quite a bit of supply there, it looks like, just kind of overhead there. But momentum, it looks like momentum's kind of catching up with the move as well. So down below in the RSI, we see momentum nearing those overbought levels. So not to say that this move in the semis could happen within the next couple days, but we definitely have some resistance ahead, and it's lagging behind what we've seen so far.
That's a great call out, because you're right. The RSI showing the highest valuation we've seen for it, dating all the way back to January. And look at where we were in January. Not to suggest, the RSI doesn't tell you values relative to price, but it is notable that while the price action is making a relative high in the short run, that the RSI is actually confirming that break. So this is kind of a bit of an optimistic lean, even though the price action remains below the 200-day moving average. Now, the big move today, this is not really a shock, but take a look at transports, Rachel. Transports rallying hard. So, of course, I would imagine this is a story around the risk and concerns we've been seeing from the ports in the last couple of months. There had been discussions that we were seeing ships not even being deployed to the U.S. from China. So empty ships coming or ships that had dramatic reductions in the amount of cargo. And this is a pretty decent indication that the lifting or pausing of these tariffs, at least in the near run, is going to have a positive impact relative to the aggressive sell down that we've seen here, meaning simply we all had a lack of certainty about what was coming, and therefore we had no choice but to trade as though we expected these dramatic slowdowns. And if those dramatic slowdowns are not going to take root, Rachel, you're going to get some snapback rallies, it would seem.
Of course. And that's kind of another reason why markets are going to be leading indicators of anything yet to come. So if we're seeing that transports are kind of kicking into high gear here and breaking through their prior resistance, which is kind of right around that 15,000 level that we saw there, and it's confirming with the other moving averages too. So Dow theory on the Dow transports kind of hangs in here in the balance as well. So that is a move that we're seeing that may tell us that there could be some positivity upon the horizon if this move continues.
Well, you know how I feel about positivity. I mean, that's how I try to bring what I try to bring to the table every morning. So hopefully that positivity carries today when we're looking at the transports. Now, if we're going to look at the transports, we've got to give consideration to Dow theory. So I'm going to bring over my Dow theory chart real briefly here, Rachel. I'll let you speak to this for a second. Both of these, of course, are weekly charts. And we've seen the Dow get a nice bounce. We've seen the Dow transports get a nice bounce here. Let me change my study detail to at least make these line up. But when I'm looking at these, Rachel, it still seems as though we have to make note of the fact that we've rallied the transports potentially into an area of former support, now potential resistance. Got a little bit of room to go there, but you'll notice that the industrials are holding on to that long range. In fact, I'm going to make these line up. I think that's a 200-week moving average. So let's just go with the same stuff there. All right, so there you are. Industrials, the Dow Jones Industrials, the Dow 30 bounced off the 200-week moving average, whereas the transports are rallying into it. It's just notable. I don't want to overdo that thought. I still think it makes sense to pay attention to it.
That is a really good call out there because the trend does look a little bit different. So it's definitely stronger in the industrials when we zoom out, look a little bit long term, where, yeah, our 200-week moving average wasn't even tested, but on the Dow transports, it was actually broken, and we're kind of coming up and retesting that now. So it's either, yeah, there's been quite a bit of a divergence there on the transports versus the industrials. And that's a failed breakdown that's maybe just coming to retest, or this type of disconnection between the two continues from here.
Now, with that in mind, let's kick it over to another important area as it relates to all of this. How about the move in oil? Tell me about this. I'm guessing the daily chart is okay, but what if I changed this to a tighter window of time? Maybe a 4-hour chart that would help us see the trend a little bit more speedily. So I'm going to back that in. There you go. There's a 4-hour chart, but I'm missing one key component. I'm going to add in an RSI down below here because I'm of the belief we might have some indication from the RSI that something else is happening here. Okay, what do you see on this chart, Rachel?
I see quite a few things. So, I mean, obviously, oil has been in a downtrend and broke support over the last month. But what it's been doing over the last month is kind of carving out this, I would almost call it like a possible double bottom pattern that's occurring, because we retested those lows that we made. And formed that neckline or that resistance that we're kind of waiting for price to kind of retest around 64 or so. So we made those two bottoms there. But while we were carving out the possible double bottom pattern, we saw that momentum was actually giving us a little bit of a bullish divergence there. So it was creating higher lows and momentum. And now even today with the move especially, we are seeing overbought levels in the RSI just because of the strength of the move. So really a lot of oil traders and bulls maybe looking for that 64 level or so as resistance to see if this what we call possible double top or double bottom pattern actually turns into a confirmed double bottom with that breakout of resistance.
So a couple of things you called out that I just wanted to kind of restate, and that is the potential breakthrough 65. I love what you called out here. I certainly agree with everything you called out initially. My reminder is you called it a potential double bottom. We don't call it a valid double bottom until we break the neckline or the midpoint of that double bottom, and that's that ledge at about 65 or so. You can see we've failed at that. This is the one, let me see here, the 5-day, I think, moving average, 325 periods. So yeah, something about around a 5-day moving average here, everybody. So pretty notable level at 65. If we could pop through 65, then you could see a bit of a continuation move in the price of oil there, everybody. That's a pretty interesting opportunity. Here's how it looks on the daily for you once more. There's the 65 level. There's some overhanging resistance at about 67 or so, between 66 and 67. I think that's notable as well. Still in a downtrend, but that does not mean we aren't witnessing a bit of a potential reversal here. Desert Saguaro, I'm happy to give you that. I will happily share that that Dow theory chart with all of you. No problem there. Give me just a moment to do that. Some other areas of note we're going to touch on real quick. VIX moving aggressively to the downside. We like this if we're looking for comfort in being long, Rachel. We've broken the 20 level. This seems notable. We have not been under 20 for quite a while, basically since back to pre-Liberation Day. So this does seem like a pretty good level to achieve. Any thoughts on the VIX you'd like everybody to know about?
Yeah, typically like there's that heightened level of fear or in corrections or bear markets, we typically kind of see the VIX above 20, and the fact that it's kind of coming below 20 today, especially with the move, is definitely very notable. We'll probably see less volatility in the indexes too when we see the VIX at lower levels. Obviously, we're seeing volatility to the upside today on just the move that's existing, but typically it is what longer term investors will tend to look for is that VIX below 20 as those kind of more stable environments for the market.
Yeah, I think that's a good way of putting it. And the reminder that I want to give everybody in doing this, if you're thinking about this today as a risk on type day, risk on does not mean buy everything under the sun. It doesn't mean buy with reckless abandon. It means having a plan and sticking to it, I hope. That would be my biggest encouragement. Now, the reason I say that is that moves like this, these are fun. This is a great start to the day. But if we start believing that there is only optimism from here, only upside from here, then we put ourselves at risk. Remember, there is always the opportunity for a change, a different headline. Things can shift, things can change at a moment's notice. I don't want anyone to get head over skis in their buying. If you're going to buy, do it, but do it with a plan. That's all I encourage you to give thought to, okay? Let's not get too beyond our means here, not too aggressive. Make sure that the aggressive nature you're adding to your process is something you're comfortable with. I just can't reiterate that enough. All right, I'm sharing that that Dow theory grid for all of you. Please remember that grids and scripts that we share here are not guaranteed. They're not guaranteed for accuracy nor timing, and they are not a recommendation for their use. Okay, Rachel, with the thought that potentially we're looking at U.S. economy becoming healthier on the heels of this news, we've seen oil rallying a little bit, but we've inversely seen quite the correlation with gold. Check out the move in gold here. As we have been stair-stepping our way higher, today's action seems to be testing a very important level of short-term support.
Definitely, and that kind of speaks to a lot of the rotation that we're seeing from the safe havens to the risk on just with this move today. So, and that's been something that we've seen a little bit of pullback or a little bit of a signal in gold just with kind of slowing momentum over the last couple weeks. And we saw that it's been kind of trading in a little bit of a range, but really this retest of support really speaks to that rotation out of the safe haven into some more of the risk on areas of the market, like we've kind of talked about already, small caps, mega cap growth, technology, some of those different areas that we are seeing a bit of a move in. But 3,200 is definitely that level of near-term support that we're seeing in gold here.
Yeah, it sure is. And again, that could mean something, bigger is in the works. But a short-term test of support is one thing. A break of the trend line that's been working, in this case, everybody, it might be that 50-day moving average in purple. You'll see we broke it back here and have really been just casually maintaining it every step of the way. So look for a potential short-term test of the 50-day. A breakdown below the 50-day would be significant. We got to be aware of that. And John, the Noble Savage, I'm going to agree. Yeah, Rachel knows what she's talking about. I love having Rachel on. She's fantastic. There's a reason we love rotating through our regional investment strategists, everybody. These guys are fantastic. They are wonderful. And if you're not spending time with your regional investment strategist, you're missing out on an opportunity. Rachel is linked up with her local branches, and that's a good chance for just about anybody to have a sit down with you, Rachel. It's not something that we talk about on the segments, but it might just, let me give you 30 seconds to let everybody know that they can get with you, can't they, if they're in your region?
Yes, of course. So if you're within the South Atlantic region and you work with a financial consultant within 5 different states that I cover, we can definitely have a conversation around your investing or your trading strategy to kind of see how you make decisions, how much time you're really spending on looking at the markets, putting your process into place, working on taking emotions out of things and really formulating a true plan that aligns with your financial plan that you have with your financial consultant too. So there's a whole team of me. I work with a ton of great folks all across the country. So I would definitely recommend just reaching out to your financial consultant, and your regional investment strategist would be happy to have a conversation with you around your strategy and process.
Beautiful. Well said, Rachel. Thank you. Okay, I'm going to move us into something else that's risk on this morning. How about what we're seeing, in the way of a Bitcoin move today? Had a little continuation, maybe a little bit of a leading heads up we got on Friday or Thursday and Friday of last week. I had a bull flag drawn in here that I'm going to eliminate now, but you can see, my goodness, the optimism as it relates to Bitcoin has been pretty fantastic since we broke the downtrend. Go back to when we recaptured the 20-day mid-April, Rachel. If you'd have just been a buyer based on the break upward through the 20-day moving average, many traders would have been very, very pleased with the move. I mean, we're looking at a possible, what are we up, 20,000, basically 25% since then.
Yeah, it's been a crazy move. And the interesting thing to me is even with the pullback in some of the indexes, Bitcoin has kind of really held in there quite a bit. I mean, it did have that break of support, but it rebounded a lot quicker. So it's almost been kind of like a leading indicator of risk on. And right now we're hanging right around that area of resistance at those all-time highs. And today so far, it's wanting to give us a little bit of a doji candle, but obviously we won't know until this trading session is complete. But it may, if we kind of see some of this action continue with that doji where price is kind of trading around right where it opened, it may lead to a little bit of a pause or some indecision here at resistance.
Yeah, exactly that, right? A great move, but maybe we get a little bit of a pause as we push into these highs in the neighborhood of 110,000. We'll see how that goes. But, technical levels, when you're paying attention to what's been going on here, it's a consolidation after a nice move to the upside. This consolidation lasted about 2 weeks. It didn't give any back. So when you're up at this upper range, could still consolidate, try to see if what we want to see if we're bullish is that we maintain the basically a level that we have rallied into here, right? So maybe somewhere over about 102,000 as a short-term support zone might be an indication that there's potentially more coming here. We'll have to keep an eye on this, as we will certainly do on this particular class. The other thing I'm here, and I'm seeing a lot of questions about this one, and that's communications in general. Now, communications collectively is up today, but there are some stocks in that group that have been struggling this morning. And I'm thinking this might I'm just going to try and answer some of these questions about, Netflix, which is off today, 2.25%. Why isn't Netflix participating? Why isn't Meta participating in Meta is participating, pardon me, up 5.5%. Oh, it was Spotify also in that communication space that's off 5%. Rachel, any thoughts about why some of these stocks that have been leading us higher might be pausing in the midst of this, movement here? We're seeing a little bit of give and take. Is this simply profit taking in some of these bigger positions?
So it does look like it could be a little bit of profit taking, because obviously, the mass majority of stocks have been in a downtrend with that latest correction. A lot of stocks have kind of been making their way back up. We've seen a lot of breadth participation, and obviously we have those leaders like Spotify being one of those that actually made new all-time highs. One of the few stocks that did make new all-time highs amidst this entire correction that we've seen. So sometimes when stocks do make those new highs or kind of lead in performance that way, sometimes they need just like a little to take a little bit of breath or a little bit of catch up and maybe just correct through price or through time and to kind of take a pause here. So that's seems to be a little bit of what we're seeing as it hit resistance of those prior highs. We probably saw a little profit taking place.
Yeah, I think that, let's not, we're not going to get too far ahead of ourselves when we're looking at these charts. Ultimately, we've got stocks moving to new highs, pulling back to short-term areas of potential support. Doesn't look to be a huge move in the way of Netflix or Spotify, but just the lack of participation is what I think has people a little bit uncomfortable or maybe not pleased. But again, you know what? You've probably been pleased with the moves in these two for the last few weeks, while the rest of the market wasn't exactly there. So this is simply playing a little bit of catch up. All right. A couple of other things we wanted to look at this morning. I thought I had a headline on. Well, I did see. Try again. All right, everybody. So what I'm seeing here on Cloudflare is an upgrade today from CICC analysts upgrading Cloudflare to outperform from market perform, and looks like a new price target on this one at 154. Sorry, everybody. There's been a bit of an echo on my voice there. I apologize. I know that's difficult. One Kevin is more than enough. You don't need two. So hopefully we've got that cleared up. But Rachel, quickly, when you're looking at net, quite a potential breakaway move today.
Yeah, looks like what we would call a little breakaway gap, where we see a gap above that prior resistance there. And we're seeing that golden cross happen between that 20-day and that 50-day simple moving average as well. So it looks similar to what we called out from a couple of the other indexes as well, where it looks like a little bit of a head and shoulders bottoming pattern that's occurring here with that move too in net. So that's what I'm seeing here.
Yeah, I'm seeing it as well. We could call this kind of like a right shoulder, this one a left shoulder, and then your head down here. Having cleared this, that's a pretty deep level. But if you're looking at this just from that measured calculation, as we kind of like to do every now and then when it's appropriate, we just take the look at the line here, take our line, activate or duplicate, and that's going to suggest a potential to test highs. Rachel, again, never a guarantee, merely a approximation, But boy, that could be fantastic for bullish traders thinking this thing can get back to the prior high around 177. Wow. A couple more in this analyst upgrade scenario. We did hear of an upgrade in coin out of Compass Point. Now, coin is in a different situation relative to Bitcoin. As you can see, everybody, this is playing substantial catch up, it would appear, Rachel. They were upgraded by Compass Point to neutral, had previously been a sell, new price target of 195. Says April and May trends imply Coinbase generating about $1 billion of annualized EBITDA. The firm sees so-called, quote, green shoots, end quote, for a resurgence in retail trading driven by higher altcoin prices. So I find that to be a little bit interesting, mainly because it has been completely lagging everything that Bitcoin has done. There are a couple other proxies that have been tracking it much closer. Coin is not one of them.
Yeah, definitely not. It's been lagging quite a bit with this downtrend that we've seen, and then that retest of support that we saw as well. But you're calling out the pattern again. It's a similar pattern that we've seen before, and it looks like that inverted head and shoulders pattern or bottoming pattern that we're seeing develop. So this is definitely one I am watching on coin, and we're seeing almost like a breakthrough of it today. We obviously want to see some volume or participation in that move of that break of that neckline. Traders, if it is a confirmed head and shoulders pattern, they would be looking for a 1 to 3% move or close above that neckline before kind of projecting, again, that target price above that breakout, which, Kevin, your point, it's never a guarantee, but for traders that are trading these patterns, that may be where they're placing their profit targets if they see that confirmation from this breakout.
Yeah, exactly that. It's not a guarantee, not a certainty, but it's a lean that a breakout through this level on a closing basis gets you more apt to continue higher than it does for a rejection. And then the more days above the 208 on a closing basis also gives you more confidence. Now, the intriguing thing about this is the level that it could be achieving if it does make the so-called measured move out of this range here. Rachel is looking back to these peaks in here, which were resistance until they got broken and became support. So, potentially a 260 upside if it can start working its way higher. And I'll remind us again, even though we talk probabilities, the probabilities are that it's going to stair step its way into that, Rachel. It's unlikely to make a 50, 60, 70 point move to the upside over the course of a 2, 3, 4 day window. So, the one nice thing about that is we can position ourselves as traders. If you want to be in on the long side, you can set those levels to the upside where you would say, oh, I'm feeling a little bit more confident. I only started with 10%, but now we've achieved this level. Let's add another 10%. Again, it's just following the playbook that you're building for yourself. Make it as easy as possible. We're also getting some lift this morning in one that I didn't expect, but it's Marriott. The reason I didn't expect it, I didn't really give thought to this, I suppose, until just now. But if we are healthier economically, well, then some of the stuff we've been seeing as it relates to the travels industry, airlines, so on and so forth, that may very well be in line for a lift. And Marriott got upgraded by Jefferies today to buy from hold, new target at 303, up from 226. But the ledge that has now been achieved is the important note, I think, from a technical basis, Rachel.
That's the exact one I'm looking at as well. That's that old resistance becoming new support, that textbook that we're kind of seeing there. So that new support is going to be right around there, around that, what is it, like $270 level. So maybe this is kind of something that we're seeing is that catch up, like you mentioned, where we're seeing the trend kind of turn around. We're seeing those gaps above those moving averages. So this is just something that we'll have to watch to see if it continues from there. But that next resistance up ahead, I would say would be at all-time highs, or even into that area around 300 or so, those round numbers that we love. So that's where traders will be looking for that next kind of profit-taking area for those that are participating in this move or entering into some of those trades.
Yeah, I think that 295 and above level is kind of notable here. We'll see if, I mean, look, from a risk reward standpoint, a gap move like this might be the type of trade where some traders in the short run will get started with a gap like this and then look to target that upper range. The reason being, a move back below the lows you've made today could be an indication that the gap, it can't be maintained, cannot be held. But from a risk reward standpoint, that could work out. I mean, you're looking at potentially 25 to the upside. And if you keep your risk under 6 or 7, well, now you're looking at a better than 1 to 3 risk to reward ratio. And that kind of falls in line with something that traders do commonly look for. Not too surprising, though, Rachel, in that we're getting upgrades to some of these. You're going to get some downgrades to a few others. Before I move into a downgrade, I just wanted to highlight, I was mentioning travel in general, and today it seems notable. If you take a look at the total airline stock position, the Dow Jones US index, take a look at this level being achieved. We've not seen the 200 days since late March here. This seems like another one of those significant developments in terms of a broader index.
Yeah, it looks similar to pretty much everything that we've been looking at. Well, we're seeing that move up the 200 day. And I mean, you're calling out the higher lows that have been made. We've seen the higher highs. So maybe this is just kind of the start of that continuation of that move. And I mean, if we're seeing this through the charts that we're kind of cycling through, it moves above the 200-day moving average. You're almost wondering what that market looks like, in particular, too, with this participation. So again, old resistance becomes really that new support. We'll have to see if that 200-day holds at that crucial support.
Yep, I see that as well, Rachel. Let's wrap it up, everybody, with one final symbol this morning. I wanted to bring up Target, and the reason is because they were downgraded, but it's always intriguing to me. We have Bernstein downgrading Target to an underperform rating. Previous had been at market perform. Price target now is $82. That's down from $97. The firm says, this is according to Bernstein, the going is getting tough for Target. So credit card data paints a bleak picture, according to Bernstein, for the company's Q1, which has been dampened by poor weather, weak sentiment amongst consumers, and the DEI-related strike in March, according to analysts here. So Bernstein believes that this is all before tariffs even entered into the discussion for Target, which means that Target will likely have to lower guidance for their full year. It thinks Target faces a difficult trade-off, that is, between stimulating sales growth and maintaining its margins. Now, the firm's analysis shows that it is unlikely to achieve both and increasingly likely that it achieves neither. Now, the reason I'm bringing it up, it's not a great note. If you're looking for a positive note from an analyst, that isn't it. However, it is notable that Target's up 5% on a terrible note and a terrible downgrade and moving through a potential important area. Does it mean that the bottom is in? It may, everybody. One of the key details that we want to remind ourselves is when we start moving positively in terms of price action, following bad news, bad data on the company, then it can imply that the lows may be in. Can't say it today at this point, way too early in the first 45 minutes. But everybody, you'll note, we made a big move through this level right here. We are above the 50-day moving average, and we have seen that the RSI is the highest we've seen out of it dating back to January. So this is an improving chart regardless of what the analyst note is. And I just wanted to make sure that we brought that up. Now, We've got quite a lot of questions in the queue about Rachel specifically, Rachel's counterparts in other regions. My encouragement is to reach out to your dedicated financial consultant in your branch. Let them know that you have seen Rachel. You have some questions that would be appropriate for one of the regional investment strategists, and you would like to know who that is, how you can contact them. Our consultants would be more than happy to get you connected with our regional investment strategists. And I hope that you all realize how wonderful they are. I think Rachel has done a fantastic job this morning of highlighting the merit of working with a regional investment strategist when given the chance. As you can see from Rachel's discussion with me today, she is clearly watching the market. She knows exactly what she's talking about. And this technical analysis conversation that we have in this class 4 days a week for all of you is one that Rachel is absolutely happy to participate in. And I love having you on, Rachel. It's been a wonderful discussion today. Thank you so much for sharing your thoughts, your insights, your ideas with our viewers. It's been a wonderful discussion today. Thank you. Now, to all of you, thanks for being here. Big thanks to Mike Fairborn. And follow he and me on X, Mike Fairborn CS, Kevin Horner CS. Hit that thumbs up button down below, everybody, if you like today's conversation. I apologize I don't have a survey for you, but if you're looking to make a comment or you have a question and you're catching us in the archives, don't forget you can use the comment field right beneath the presentation window here to let us know your thoughts and bring your questions. Those come directly to me as well. So with that, we'll wrap it up. Hope you all have a fantastic Monday, everybody. Enjoy the green while we got it. I do look forward to seeing you all again real soon.